Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, April the 9th. Quiet was the theme yesterday, at least two-thirds of the day. Markets actually grinded higher pretty much the last hour of the day to close positive. We were down pretty much most of the session. S&P up 9 on the final number. U.S. dollar closed up a few cents. Nasdaq up 16. Dow up 48. We continue to see resilience in this market. This market has been well bid up since the beginning of the year, and we continue to see signs of buyers of dip coming into certain key levels and stepping up and buying this market higher. We have a lot of mixed signals. We've been having mixed signals for the good part of, I'd say, at least 6 to 8 weeks into the new year. Now we're going to have some sort of a push either up, some sort of a capitulatory rally into and above 1575 in the S&P cash, and then possibly look for the market to sell off. And I think since we're there, I mean, we are literally within handles away in the S&P cash, and why not get there? And I think that it's probably better off that the market pushes to 1575. Everybody, you have all of the week longs run in, buy this market only to sell off, and that's what I'm looking for, some sort of a capitulatory high in the market, and then have the market roll back over again. And the reason why is that not because I'm holding positions or I'm short, I'm a bear. It's I'd like to see a correction in this market so we can have at least an increase in volatility. Now, we've had a little bit of volatility, but very few and spotty, and that's why the markets have just been really kind of choppy, really non-existent, and it's tough for day traders during the day because markets really don't move, and of course with lots of stocks to monitor, you miss the ones that are actually are moving. So that's why we want to look for news-driven earnings event, which earnings did kick off yesterday. We had Alcoa report first quarter numbers. Top line 11 cents versus 9. That was a beat. Bottom line revenues 5.83 billion versus 5.86. And that was a miss. And Alcoa yesterday in after hours down 1.4%. So it's Alcoa as of right now. So it is a commodity. They're still having some problems. We'll see. But earnings season will be in the spotlight, especially this quarter coming, to see if a lot of these big cap companies are slowing, or we do see an increase of growth. Let's go right into the charts. Again, guys, really not much has happened, but I want to show you a few things. We still have a sell signal as bullish BPSPX, which is the bullish percent index of the S&P. So we do see what we have here. As you can see, we have lower highs, and now we have a break in the S&P. But again, as you can see here in the S&P, we have buyers at dips continue to step in this key level of 1550. So we'll continue to monitor. Again, if you're day trading, you just want to be ready for, because what happens is fear happens real fast when the market does decide to sell off. This is the interesting one, is the S&P stocks above the 50-day moving average. And as you can see here, we are continuing to make lower lows and lower highs. I think this 60 area is going to be really key. If 60 breaks, this 60% breaks, I think you'll have an increased pressure on the S&P as well to break that 1550 area. So that's going to be a key barometer of one of my indicators that I'll be watching. Okay, now let's take a look at the VIX. Remember we had that black candle, but nonetheless that black candle worked again, and we did get a pullback in the VIX. So we have subdued volatility, right, and we have no fear. We have no fear in the markets. We have an increase in volatility when the markets do sell off a little bit, as we had here. But again, unsustainable. So I roll right back. We make a new low, and now we just sideways consolidate pretty much half of March and the first week of April already. So we have no fear in the markets, and I can show you that by the CBOE closed bullish, 90%, down 10. So as the increase in fear started creeping up, we easily roll right over again. So what is that telling me is that we have high complacency, and it's just a matter of time before markets do take over. Now, that is not a sell signal. I'm not advocating anybody to go look to short the market. Topping is a process, and that process needs to be unwounded, and we need to start breaking some lows with a little bit of a back test and some key pivotal support, which would turn resistance in order for us to short the market. But as of right now, We remain in an uptrend. Today, there's no reason why the market cannot go higher. Seeing that in the charts, we do have again Nasdaq, Russell lower, transportation sector actually starting to break down, seeing signs of breakdown. So leaders are starting to break down, semiconductors starting to break down, but we still have resiliency in the S&P and in the Dow. So even though they're the followers, we still want to just use caution here, okay, if you're trading the S&P intraday. All right, so here's the USO. Here's interesting. This is really interesting. Take a look at this line, 3286, 61.8% retrace from the top to the bottom here. And look at this. We have our volume zones. Now, this is a daily chart. This is heavily weighted. So this area, look at the back, come in this back area here. So if you look at a trade USO oil, this is the area that needs to hold. Now, this is a logical place for a bounce. So we had a 2-day bounce here. But if we break this, we have this little thin zone. So we easily could come and retest the lows here at 76% retracement at 32.21. So keep an eye on this, guys, if you're trading oil. If we do break this and close on a closing basis, I think you'll get a quick flush down to that 76, if not the low of 31.17 from the, I believe it's the December low. So that's something I'll be watching for a trade. If we could take out the 20-day moving average, then I'd probably look to get long up in this area here with a stop down below at the 61.8%. And this would be a longer swing trade if you're looking for a swing trade in oil. Okay? All right, guys, so here's the spiders. As you see, we tested this long-term trend line. We did break back above it now. We're just about ready to fill this red candle, and anything breaking above this area is going to be bullish, and we're going to look to test that that multi-month high that we had on Monday that I showed you. So nothing wrong about this chart at all, especially when you have two days building, and we had unwinding of our momentum overbought reading on our stochastics here and our MACD. So obviously, look at the volume is not what we want to see if you're a bull, but you know, price is what pays us. You know, volume confirms price, but I'd like to see this this volume increase a little bit to get really excited here. Okay, and here's the 60-minute chart. Looks like we're going to probably look to retest that 156.90 area. That's going to be a key area. As you can see, we've been around it, below it, back in this area here and up in here. So we have a 2-day bounce from Friday. We had Monday, and then Monday we came in here. We back tested this pivot, and then we actually shot into the close the last 15, 20 minutes. Actually, the last hour, you can see that big topping, that bottoming tail here. Buyers came in right into this 155.37 and then ran the market higher the last hour. And you can see that a little bit better. But again, here's the 30-minute chart. Here's our channel, and we've been in this all of March, all of April. So there's really, look at this choppiness. So really, really chopped. So if you're a scalper, you're having a field day. If you're a scalper, but you see what I mean. Gap down, held the line, and we sold off for the first hour, very slightly to the downside, which I thought that we might have some momentum going in the morning. And then right around 10:30, that was it. The main pivot held, and then we just rallied into close. We actually had usually what we did again, sideways consolidation, and then broke up the last hour and a half, and then the last hour really giving momentum. So buyers are still around, guys, and until this market breaks higher, I think that the key thing is going to be breakout is 1576, a real hard run up, and then fail, and then really close low on the day. That'll be that capitulatory top that I'm looking for to actually start looking for some swing shorts. But until then, totally day trading. I would not be shorting the market. The market is too strong. We have this market's been well bid up. If you're short and you're trying to short the market, you're not making any money. That's for sure. Take a look at the transportation sector. As you can see here, we broke down below this key area. Now we back tested it. So today at the close, tonight's analysis is going to be interesting to see what happens here. Do we break back into this channel, or do we fail? So this will be interesting because the transportation sector is our leader. And here is also the IWMs. Again, same thing. As you can see, another one of our leader, good gauge of risk. And look at the volume. Although we had 2 days of up days, volume has been anemic. So really, and yesterday couldn't have been a boring day. More of a boring day. It's just terrible the way the markets just really die after the first hour and a half of trade. XLF, We held this bearish rising wedge, only bearish if it breaks and closes below this lower trend line. And as you can see here, we're back in it, so nothing wrong with this chart at all. Actually, recouped all of the engulfing red candle here the last 3 days from last Wednesday. So nothing wrong with this chart at all, guys. So that tells me that we are headed at least higher in the short term, at least for today's trade. I think the markets are going to move higher unless obviously something happens or someone announces something that's a real negative in the market. Dow Jones, again, caught this trend line here, back up again. So, again, nothing wrong with this chart as well. And, of course, the SMHs, same thing. Now, you can see, I mean, if you look at it, you can even see maybe have a head and shoulders, right? Left shoulder, head, right shoulder, neckline, back test on the neckline. This very well could be possibly a head and shoulders pattern here. I would advocate that, actually. Yeah, I would say that this could be a head and shoulders pattern, and it actually triggered. So we're back testing this neckline. I'm going to label this for tonight, for tomorrow. But again, guys, you know, we want to see now SMH is breaking down, the SOX stocks in the sector also breaking down, which is another semiconductor index. And when you have these key sectors starting to break down, and a lot of mixed signals, and you have the S&P and Dow moving the markets higher, or at least not breaking down, that's a real big red flag. And especially when you throw in sentiment is extremely bullish. You can't deny they got to be real cautious, especially if you're a longer term player, a swing trader, or even positioning trades overnight, 2 or 3 days. You have to be really cautious, because as you can see, look what happened a couple weeks back. S&P down 20 handles at one point. That could really take a big beating in your account. So just really use caution here. There's a lot of red flags that are out here, but the markets are resilient. You can't deny that. And if you're looking to trade them, you got to trade them for the long side unless you see relative weakness, at least intraday. You have to trade them for the long side. I would not be looking to short anything here unless it's just a quick day trade. You're looking for a key spot, and you're thinking maybe with a tight stop, markets roll over intraday. That's one thing, but I would not be looking to short the market in general. Double bottom in Apple, maybe we get a little momentum up here. Again, maybe to the 440-ish area, if this can actually get going. Otherwise, a break below 420, we should see 400. Okay, here's the SMHs again. And lastly is the Qs. Qs, back testing this upper trend line, and this is interesting. Again, technology breaking down, money coming out of technology. But if you have rotation, it's going to keep the market up. And that's what we've been having, is rotation out of these higher big cap tech. Google getting killed, Netflix getting killed, Amazon getting hurt. So you have a lot of big cap money, big cap tech money coming out and into certain sectors. So that's what's floating the market right now. So let's just be resilient, keep your stops in place, don't get stubborn. If you're wrong, get out. You could always get back in again. And that's going to be my theme for today. And I am looking for the long side today, unless something changes again. All right. Watch your earnings calendar, guys. If anybody is holding into earnings, you want to make sure that your stock that you're holding, you can properly hedge yourself if you want to keep it through earnings, or get out prior to earnings. All right. Have a great day, everybody. We'll talk to you tomorrow. Take care.